Every nation on Earth is carrying debt. The United States now owes more than $38 trillion, the largest debt in its entire history. The European Union holds around $14 trillion. Japan carries nearly $9 trillion. Even oil-rich countries like Saudi Arabia and export giants like Germany and China owe massive amounts. But here's the real paradox. If everyone is in debt, then who is actually being paid? This is the historian tube, where money, power and history collide, and nothing is ever as simple as it seems. Debt is not just a burden. It is the hidden structure of the modern world. Every war, every financial crisis, every economic boom, and every collapse stands on this invisible foundation of I owe us. And if you follow the chain of creditors long enough, you find something deeply unsettling. The world doesn't owe money to one specific person or one single country. It owes money to itself. But that doesn't mean everyone profits equally. To understand how we reach this point, a world drowning in more than $315 trillion of total debt, almost 3 times larger than the entire global economy, we need to go back to the beginning. Long before the first credit card, before online banking, before digital transfers, the idea of national debt was born, not on Wall Street but on the battlefield. In 1694, England was at war with France and running out of gold. The king turned to wealthy merchants for help. In return for a permanent stream of interest payments, backed by future taxes, those merchants agreed to finance the crown. To manage this new system, the Bank of England was created. It changed everything. For the first time, a government could spend money it did not yet have, and in return, lenders received something incredibly valuable. A promise from the state. A promise that could be traded, bought and sold. That was the birth of the government bond, the small seed that grew into the modern financial system. France copied the model. The Netherlands improved it. The newly independent United States used it to fund its revolution, and later, its expansion across the West. National debt stopped being a sign of weakness. It became a sign of trust. The power to borrow became the power to rule. Empires once conquered land to collect gold. Now they issued bonds to collect interest. The battlefield turned into the balance sheet. 3 centuries later, debt has become the world's most powerful export. The United States owes $38 trillion. Japan owes more than $9 trillion. And global borrowing rises by the equivalent of $1 trillion every 100 days. Every country borrows. Every bank lends. Every citizen, through taxes, savings and pensions, is both a debtor and a creditor. But who is really holding the other end of the rope? Let's begin with the United States, because its debt is not just national, it is global. Out of that $38 trillion, about half is publicly held, which means it is owed to investors, not to other parts of the government. Roughly 2/3 of those investors are American institutions, banks, pension funds, mutual funds, insurance companies, and even the Federal Reserve itself. The remaining 1/3, around $9 trillion, is held by foreign countries. Japan is the largest holder, with around $1 trillion. China follows with about $800 billion. Then come the United Kingdom, Luxembourg and Belgium. So when people say America is deeply in debt to China, that is true, but only for around 2% of the total. Most of America's debt is actually owed to America. The Treasury issues bonds. Banks and financial institutions buy them. The Federal Reserve often buys them back, creating new dollars in the process. Americans pay taxes that fund the interest on those bonds, and that money flows back into American pensions, retirement accounts, and investment funds. It is a financial hall of mirrors. The debt is real. But the creditor is often just a reflection of the same system. And this strange circular pattern is not only American, it is global. Japan lends to the United States through treasury bonds. The United States lends to Europe through the IMF. Europe lends to developing countries through the World Bank. And developing nations lend back to advanced economies by placing their foreign reserves into Western government bonds. It is a planetary game of hot potato, except the potato is made of promises. Every country holds someone else's IOU. Every promise is secured by another promise. It is like a poker table where every player borrowed chips from the person sitting next to them, and the only thing keeping the game alive is that nobody gets up from the table. But there is a fourth layer, more powerful than governments, stronger than banks, and larger than nations themselves: the markets. Behind every government bond exists an entire network of powerful institutions: hedge funds, pension funds, sovereign wealth funds, and central banks controlling tens of trillions of dollars in assets. These are the real judges of global credit. They decide which countries can borrow at low cost, and which nations must pay a painful price just to survive. The moment they lose confidence, currencies crash, governments weaken, and entire economies can be reshaped overnight. Democracy may decide who leads, but markets decide who survives. And at the centre of this entire system stands the ultimate market maker, the central bank, the modern high priest of global finance. Central banks do not simply manage debt, they create it. Every time the Federal Reserve or the European Central Bank buys government bonds, new money is created in exchange. The liability on one balance sheet becomes the asset on another. Every dollar in circulation exists because debt exists somewhere behind it. There is no such thing as debt-free money. Every coin, every note, every digital dollar carries an invisible IOU written beneath its surface. For decades, this cycle has kept itself alive through one fragile force: confidence. As long as investors believe governments will continue paying interest, even if they never fully repay the principal, the machine keeps running. But what happens when that confidence begins to crack? We have seen it before. In Greece, during 2010, government debt became impossible to manage. Bondholders panicked. Borrowing costs exploded. Yields surged. The European Central Bank and the IMF stepped in, but rescue came with a price: harsh austerity, higher taxes, deep spending cuts, mass unemployment. For an entire generation, the word bailout became another word for sacrifice. In Argentina, repeated defaults turned national debt into a permanent curse. In Sri Lanka, fuel shortages, public anger, and political collapse followed when the government ran out of foreign currency to repay its loans. When the system breaks, the creditors suddenly become visible: the IMF, the rating agencies, the silent bondholders, unknown names with enough power to hold entire nations by the throat. And yet, even after collapse, the same cycle begins again. New loans replace old ones. Old debts are renamed, restructured, and extended. The machine resets with a different label, but the same burden underneath. Because in the 21st century, debt is not built to be paid off. It is built to be continued. Governments today are not planning to erase their debt. Not now, not later, maybe not ever. This is not a conspiracy. This is policy. When ordinary people take a loan, they are expected to repay the principal. But governments play by different rules. They treat debt like a permanent subscription, issuing new bonds to pay off old ones. Economists call this refinancing, but in reality, interest becomes the true product, the price of stability, the rent charged for keeping the system alive. The global economy now depends on that rent. Like a shark that must keep swimming just to breathe, the financial system must keep borrowing just to survive. Today, the world economy runs on confidence, not repayment. The United States will never truly erase its $38 trillion debt. It will refinance it again and again, indefinitely. Japan has been doing the same for decades. Its debt now exceeds 250% of GDP, and still, its government bond yields remain close to zero. Why? Because investors are not waiting to be fully repaid. They are waiting to renew the agreement. They are waiting for the next promise. Because for them, government debt is not a danger. It is the safest form of collateral in the world. A US Treasury bond is not seen as a burden, it is seen as an asset. It is the foundation of the global financial system. Pension funds hold it, banks use it as security, and central banks treat it almost like money itself. The entire system depends on governments never fully paying off their debt, because if they did, the world would lose its most trusted financial foundation. Imagine if Washington suddenly decided to erase every single dollar of its national debt. Banks, pension funds, and financial institutions across the world would instantly lose their safest and most reliable asset. The supply of dollars would shrink sharply, deflation would hit, markets would panic, and the system built on stability could begin to collapse. Paying off the debt would destroy the very mechanism that keeps the economy alive. So governments do the exact opposite. They continue issuing more debt, not carelessly but with precision, not as a mistake but as a strategy. Debt becomes the heartbeat of modern capitalism itself, pulsing through every pension fund, every mortgage, every stock market, and every financial system on Earth. This is why when politicians speak about balancing the budget or completely paying off the national debt, they are often selling an illusion. The real goal is not to eliminate debt. The goal is to keep it sustainable, manageable, serviceable, and most importantly, trusted. Trusted enough that the world keeps believing in it. Because the moment belief disappears, the numbers stop meaning anything. Confidence breaks, interest rates raise, borrowing becomes expensive, and an economy built entirely on rolling promises begins to freeze. That is the real secret of sovereign debt. The plan was never to pay it all back. The plan is to make sure the world believes it can be paid back. That belief creates a closed loop of trust. And as long as that trust survives, the numbers can keep expanding almost without limit. But trust is not shared equally. When we say the world owes money to itself, that is only half the truth. Because interest payments do not move equally through society. They move upward, from workers, taxpayers, and ordinary citizens to the institutions, funds, and investors that hold the debt. In simple terms, debt is not just a transfer between countries, it is also a transfer between classes. That is why rising global debt and rising global inequality often grow side by side. The system rewards those who own debt, and it pressures those who spend their lives paying for it. If that sounds familiar, it is because it is the same story repeated at every level, from households to nations, from nations to the entire planet. Creditors are not always villains. Debtors are not always victims. They are both parts of the same machine. The real danger begins when that machine runs out of fuel, when new borrowing can no longer support the promises made by old borrowing. That is when the question, who is the creditor, stops being theoretical and becomes deeply personal. Because at the top of this global pyramid, there is no single face to blame. It is not only China, it is not only Wall Street, it is not only the IMF. It is all of them. And it is also us. The modern financial system has transformed debt into money itself. Governments create it. Banks multiply it. Investors trade it. And ordinary people depend on it every single day. The line between debtor and creditor has become almost impossible to see. Debt once meant chains. Today, it means stability. But if that balance ever breaks, if confidence disappears, the illusion ends. And suddenly we remember what debt has always been. A promise that cannot last forever. What if the biggest lie in modern economics is that debt must be repaid? If this changes the way you see the world, subscribe to the Historian Tube, because history always leaves clues, and I'll show you exactly where to find them.